Today, income tax is one of the biggest ways the Australian government gets money. Before you even touch your wage, part of it is already marked for the state. It disappears quietly through numbers, forms, payroll systems, and tax offices. Most people do not see it happen. They only feel it. But before 1915, ordinary Australians paid no federal income tax. No pay, no tax file number, no automatic deduction from wages, no yearly ritual where Canberra reached directly into a person's income. And yet, somehow, the country still ran. There was a parliament. There were public servants. There were post offices. There were customs officers. There were defense plans. There were ports, railways, courts, immigration systems, and a young national government try to hold 6 former colonies together. So here's the question. If Canberra was not taking income tax from people's wages, where did the money come from? The answer is not as simple as people think. Because early Australia was not funded by one clean system. It was funded through borders, ships, alcohol, tobacco, land loans, political deals, and hidden costs buried inside everyday life. And once you see how it worked, you begin to understand something deeper. Australia did not avoid tax before 1915. It just collected it from different doors. To understand this, we need to step back to 1901. Australia had just become a federation. On paper, it was now one country. But in reality, it was still carrying the habits, rivalries, and suspicions of 6 separate colonies. New South Wales, Victoria, Queensland, South Australia, Western Australia, Tasmania. Each had its own history. Each had its own debts. Each had its own public works. Each had its own political pride. And now they were being asked to share power with a new Commonwealth government. That sounds noble. But money has a way of turning noble ideas into hard arguments. The new federal government needed funds, but it did not yet have the full financial power people associate with Canberra today. It was young. It was cautious. It was still learning how much authority it could take without causing panic. And the most important money machine it received was not income tax. It was customs. Picture the old ports. Ships entering Sydney Harbor. Cargo being unloaded in Melbourne. Crates stacked at Fremantle. Barrels rolled across the docks in Adelaide. Boxes of tea, cloth, tools, machinery, sugar, tobacco, spirits, and household goods coming in from Britain and across the world. Before those goods moved into the country, they passed through a powerful gate. The Customs House. That gate was more than an office. It was one of the Commonwealth's main cash registers. Goods came in, duties were charged, and money flowed to the federal government. In a young island nation surrounded by ocean, the border itself became a source of power. That is the first hidden truth. Before Canberra taxed wages, it taxed movement. It taxed goods crossing into Australia. And because Australia depended heavily on imported goods, this mattered enormously. Many manufactured items did not come from local factories. They came by sea. They came in boxes and barrels. They arrived through ports watched by officers with ledgers, stamps, and rules. To an ordinary person, this kind of tax felt different from income tax. Nobody came to your house and said, "Give us part of your wage." Nobody printed a pay slip showing federal tax taken out. But when you bought imported goods, the cost of customs duties could be hidden inside the price. So Australians were still paying. They were paying at the shop counter. They were paying through the cost of goods. They were paying in a way that felt less direct, but still reached into daily life. That is why this story is so powerful. The absence of federal income tax did not mean the absence of government money. It meant the government was collecting from the edges of the economy before it reached into the center of personal income. But customs was only one part of the system. There was another stream of money, and this one came from things made inside Australia. Excise. If customs duties were charged on goods coming into the country, excise duties were charged on certain goods produced within the country. And some of the most important were the familiar ones. Alcohol, tobacco, products people bought again and again. Governments have always understood something uncomfortable about human habits. Certain goods are consumed regularly, even when people grumble about the price. Tax those goods, and you create a steady flow of money. So while Australia had no federal income tax before 1915, people were still helping fund the government through what they drank, smoked, imported, bought, used, and consumed. It was quiet. It was ordinary. It was everywhere. The government did not need to know every worker's yearly income to collect money from the public. It could collect at the port. It could collect at the factory. It could collect through duties built into prices. But then came the deeper problem. Federation had created a new country, but it had also created a financial tug-of-war. The Commonwealth government took control of customs and excise, which were extremely valuable. But the states still had enormous responsibilities. Schools, hospitals, police, roads, railways, local services, public buildings, land administration. Much of everyday government still lived with the states. So imagine the tension. The federal government controlled a major stream of revenue, but the states still had many of the expensive jobs. That could have torn the new country apart. So there had to be arrangements. There had to be returns of money from the Commonwealth to the states. There had to be political compromise. There had to be bargaining. The new nation was not just asking, how do we raise money? It was asking, who owns the money? That question could shake a country. Because taxation is never just numbers. It is control. It is power. It decides which government can build, which government must beg, which government can promise, and which government must cut back. Early Australia was learning this lesson almost immediately. One country had been born, but the states were not ready to become weak children of Canberra. They wanted money. They wanted rights. They wanted respect. And Canberra wanted the ability to act like a real national government. This is where the story becomes more complicated because we must be clear about one thing. Before 1915, Australians paid no federal income tax. But that does not mean there was no income tax anywhere in Australia. Some colonies and states had already experimented with their own income taxes before the federal government introduced its own. States raised money in different ways. They used land taxes, income taxes, stamp duties, licenses, charges, railway revenue, and other sources. So Australia before 1915 was not a tax-free paradise. That would be a myth. It was a country where taxation was scattered across different levels of government. The federal government relied heavily on customs and excise, while states still played a major role in funding everyday services. In other words, the modern tax map had not yet fully formed. Canberra was not yet the financial giant it would later become. And this matters because the rise of federal income tax was not just about collecting more money. It was about changing the balance of power in Australia. Before federal income tax, the Commonwealth was still limited in important ways. It could act, but not like the modern Commonwealth. It could tax trade and certain goods, but it did not yet have the same direct financial relationship with individual Australians. That relationship would come later, and once it came, it would never truly leave. But before that moment, another force shaped the early Australian economy. Land. Land was more than property. It was wealth. It was status. It was survival. It was political power. In a country built through colonization, settlement, farming, mining, and expansion, land was at the center of the national story. Who owned it? Who controlled it? Who profited from it? Who was locked out of it? Land taxes became part of the argument over fairness and wealth. Should large landowners pay more? Should the burden fall on trade? Should ordinary consumers pay through prices? Should states tax income? Should the federal government stay away from wages? Every tax choice tells you who society is willing to pressure and who it is afraid to touch. This is the part people often miss. Tax systems are moral maps. They show where power sits. They show who carries the load. They show what governments value what they protect, and what they sacrifice. In early Australia, the government could raise money from goods, land, licenses, and state systems. But the country was growing, and growth is expensive. Railways had to stretch across harsh distances. Ports had to expand. Communication lines had to connect remote places. Public buildings had to rise. Defense had to be planned. Immigration had to be managed. A new nation had to look like a nation. And when taxes were not enough, governments turned to another old tool: borrowing. Debt helped build Australia. Loans allowed governments to fund large projects before they had all the money in hand. Roads, railways, bridges, ports, and public works could be built by borrowing from the future. That sounds practical, but debt has a shadow. Every borrowed pound comes with a promise. Every new project carries an echo. Someone, someday, must repay it. So early Australia was not simply running on customs duties and excise. It was also running on confidence. Confidence that the country would grow. Confidence that future taxpayers would pay. Confidence that the nation's wealth would expand fast enough to cover its ambitions. That is a dangerous kind of faith. Not religious faith, but financial faith. The belief that tomorrow will be bigger than today. And for a while it worked. Australia could keep moving. The government could keep functioning. The ships came in. Duties were collected. Goods were taxed. States raised their own money. Loans helped build public works. The young Commonwealth survived. But survival is not the same as strength. And under the surface, pressure was building. The old system depended heavily on trade and consumption. That meant the federal government's money was tied closely to the movement of goods. If imports slowed, revenue could suffer. If costs rose, people felt it through prices. If national responsibilities expanded, customs and excise might not be enough. And national responsibilities were expanding. Australia was no longer just 6 colonies stitched together under a flag. It wanted a voice. It wanted defense. It wanted infrastructure. It wanted control over its future. But wanting a future costs money. Then came the event that changed everything. In 1914, the world went to war. Suddenly, Australia was not just arguing about revenue systems and state payments. It was sending men overseas. It was organizing military support. It was raising forces. It was dealing with war loans, equipment, transport, administration, pensions, and the heavy machinery of national mobilization. War does something brutal to governments. It exposes weakness. It reveals whether a state has enough money, enough reach, enough authority, and enough control to survive a crisis. And for Australia, the old financial system was no longer enough. The Commonwealth needed a stronger, more reliable stream of revenue. It needed money that did not depend so heavily on goods moving through ports. It needed a way to reach deeper into the national economy. So in 1915, federal income tax arrived. Not as a calm reform in peaceful times. Not as some small administrative change. It came under the pressure of war. That is why the moment matters. Federal income tax was born in Australia under the shadow of global conflict. It was tied to fear, duty, sacrifice, and survival. It was introduced because the country needed money on a scale the old system could not comfortably provide. And once Canberra began taxing income directly, something changed forever. The federal government now had a direct financial relationship with individual Australians. Not just with ships, not just with customs houses, not just with breweries, tobacco, land, or state transfers. With people's income. That was a turning point, because money is not just money. Money is reach. Money is authority. Money is the ability to build armies, create programs, support systems, expand departments, and influence everyday life. Before 1915, Canberra was important, but still financially limited in many ways. After income tax, the Commonwealth had opened a door that would only grow wider over time. The strange thing is, many taxes begin as emergency measures, but emergencies have a way of becoming permanent. A crisis arrives. A government says, "We need this for now." The public accepts it because the danger feels real. Then the crisis changes, the country changes, the system grows, and the temporary measure becomes part of normal life. That is one of the most unsettling lessons in history. What begins as survival can become structure. What begins as a wartime need can become a peacetime habit. What begins as a response to fear can become the foundation of government power. And that is why the story of federal income tax is not just about accounting. It is about the growth of the Australian state. It is about how Canberra became stronger. It is about how a young Commonwealth moved from taxing goods at the border to taxing income in people's lives. Now return to the original question. Before 1915, Australians paid no federal income tax. So how did the country run? It ran on customs duties collected when goods entered the country. It ran on excise duties charged on certain goods made inside Australia. It ran on money raised by the states through their own taxes and charges. It ran on land taxes, licenses, stamp duties, public enterprise revenue, and fees. It ran on borrowing. It ran on ships, ports, barrels, ledgers, railways, land, habits, debt, and political compromise. The country did not run without taxes. It ran without Canberra directly taxing personal income. That is the key. The government was not absent. The cost was not missing. The burden had not disappeared. It was simply spread through different channels. And in some ways, that made it easier to overlook. A tax taken from your wage feels personal. You see it. You notice it. You know something was removed before the money reached you. But a tax hidden inside the price of imported goods feels different. You may blame the shopkeeper. You may blame the cost of shipping. You may blame the market. You may never think of the customs officer standing at the port, turning trade into government revenue. That is the quiet genius of indirect taxation. It can fund a country while remaining half invisible. But war made invisibility impossible. By 1915, Australia needed a more direct answer. And the answer was income tax. From that moment, the relationship between Australians and the federal government changed. The Commonwealth could now claim part of personal income, and that gave it a level of strength the early federation had not fully known. The country that entered federation in 1901 was careful, cautious, and financially divided. The country that emerged from the First World War was moving towards something much more centralized, more powerful, and more deeply connected to the lives of its citizens. So when people say Australia had no federal income tax before 1915, the real story is not that Australia was free from tax. The real story is that Australia was standing at the edge of a transformation. Behind the ports and customs houses, behind the state budgets and land taxes, behind the loans and railway lines, something bigger was forming. A modern nation was learning that to act like a modern nation, it needed modern revenue. And the price of that was a permanent change in power. Before 1915, Canberra waited at the border. After 1915, Canberra stepped into the pay slip. And once it stepped in, it never truly stepped back. So here is the question. Was federal income tax a necessary step in building modern Australia? Or was it the beginning of Canberra becoming too powerful? Tell me what you think in the comments. And if you want more hidden stories about how Australia became the country it is today, subscribe and watch the next video.